Good morning, everyone, and welcome to the European crossover webinar. And we've seen the dollar come back and correspondingly the euro slip. We've also seen gold going in pair back. I was looking for 1390. I've been saying that all last week. And we did go on to get the 1390 in the gold XAU, XAUSD gold spot. So, and I did go in and buy as we've gone down here and dipped into that area as we came into the Asian trading yesterday. And we're much lower. Actually, not much lower, but I'm just saying we'd taken a pretty good little dip into that area. Hang on a moment. Get something real quick. There we go. Okay, great. Okay, so let's go in and take a look real quickly on the news. Also, we'll go and take a look as to what reports we have out today. So hang on. In this first day of July. So we did have let's take a look here with market manufacturing PMI. That came out of France. We just had that unemployment here. And let's take a look here. And at the bottom of the hour, BOE consumer credit, mortgage approvals, manufacturing PMI out of the UK coming up. Market manufacturing, but that's PMI final here in the States at 9:45 Eastern, along with construction spending, ISM manufacturing PMI. Obviously, we have a bit of a shortened week here, a holiday week here in the States with July the 4th. So let's go move this out of the way. Just put it right here. And we see the dollar index come up here and come back here with challenges 50. This is something they had not been able to do all week long. Now we're getting a little bit of a pop here, but to me, like I said, it's just a little bit too late. You know what I mean? As far as I'm concerned, I don't think that this thing has very much legs. You could do for a bounce, yeah, but like I said, for much of a follow through, we shall go on and see. But from what I see, nothing changed with the G20. Everything still remains the same. The whole reason the dollar's slipping is because of the potential for the Fed to go in and cut back and do because of the weaker data. So by them now, had they resolved the whole issue, that'd be different because then maybe that makes the Fed pause. Delaying tariffs, additional tariffs, or delaying those tariffs does not change anything. Everything's still going to go on and be weaker. And so I think, like I said, well, we're seeing this offset, but I don't think it's going to last that long. So I think we'll eventually open the door for lower, but we'll see as the week continues to go on. Let's see, dollar CAD has moved back up a little bit towards this 131 area here. Obviously, the euro here down here at that 13.24. And dollar yen has made that run back up here. Just about made it there to that 18.55 area. Now let's take a look at the Aussie dollar. We had talked about the Kiwi. I think we had 67.09. For our bias chart resistance, and the Aussie did take a little bit of a jump. We had that for 70.13. It did make it up to what, around 70.30 in the 30s. Now it's at 69.98. Let's go on and get on here with our news. Worst avoided on traded G20. And that's all you can say. The worst was avoided. That's it. There's nothing that will change with that whether the Fed would ultimately go on and cut. And as long as the data comes out worse, that's still on tap. And if the data comes out much worse, then you could end up going for a 50 basis point, but we all know that 25 basis points is what they're looking at. The outcome of the weekend's G20 meeting in Osaka could have been worse, you see, but the result could have been a whole lot better too. While an all-out row on trade was averted as the U.S. and China agreed to restart talks, the final communique was the lowest communique denominator type of compromise, as was the language on climate change, which also repeated non-familiar line about the United States disagreeing. European Union was busier clinching a free trade deal with the South American Mercosur bloc that was 2 decades in the making, then found the weekend with a pact with Vietnam. Manufacturing PMI data around the region, German unemployment, and UK figures on consumer lending are among the readouts today. Let's see. There's still no white smoke from the EU summit in Brussels aimed at agreeing on the institution's top jobs over the next few years. It appears a compromise backed by Angela Merkel that would have seen Dutch socialist Frans Timmermans replace Jean-Claude Juncker as the European Commission president was vetoed by our conservative allies elsewhere, notably Eastern Europe. Turns out to be the case. It's a telling sign of Merkel's dwindling authority and the rising weight of the former communist countries within the bloc. Moving on to the markets. Much to the relief of the world markets kicking off the second half of the year, the U.S.-China trade relationship has been rewound back 2 months. U.S. concessions to be held off on fresh tariffs increase and allow U.S. companies to deal with Chinese telecom company Huawei once again, alongside unspecified Chinese commitments to purchase U.S. agricultural produce, allowing President Donald Trump and Xi Jinping's weekend meeting at the G20 summit to announce a resumption of trade talks. While not expected, the truce of the unexpected trade talks takes pressure off the world manufacturers who have been suffering again over the past month as the tariff threats increase. All they're doing is just laying off the tariffs that could immediately come. That's all. So all the data that's been weak all along, at least here in the States, will continue to still remain weak. The degree of pressure was revealed today in both the official and private Chinese manufacturing surveys for both June. They both showed the sector contracting during the month and below forecasts. Japanese and South Korean manufacturing PMI surveys also showed the shrinkage during the month, missing forecasts to hit their lows in the 3 months or more. Emerging market currencies outperform with the emerging market currency index rising to its highest since April 18th. Emerging market equity index climbing to its highest since May 7th. In Europe, Sunday's European Union summit again failed to agree to the new heads of the European Commission and European Central Bank. And that's enough on that. And moving on to the currency news. The yuan and the dollar soar and safe haven currencies slide after the U.S.-China trade truce. The dollar and offshore Chinese yuan rallied on Monday after the United States and China agreed to restart their troubled trade talks with the Japanese yen and Swiss franc, where the big casualties as investors sold safe haven currencies. While reports of an agreement had been flagged ahead of President Trump and Chinese counterpart Xi Jinping's meetings on the sidelines of the G20, the outcome was more positive than investors had expected. Trump said he would hold back on new tariffs and China would buy more farm products. Well, actually, I saw was on a news thing out of China. They did not say they would buy more farm products. I think that said they would consider or something like that. I didn't save it, but it was saying how Trump had said that they would buy, and they were saying no, they would say they would consider. Trump also said the U.S. Commerce Department would study whether to take Hawaii off the list of firms. Chinese offshore yuan rose more than 0.5% to as high as 6.8165. Let's see, the dollar, which had fallen in recent weeks on rising expectations for Federal Reserve interest rate cuts, rose 0.4 against the basket of currencies. The compromise between Trump and Xi Jinping at the week's G20 meeting went further than most had expected, with Trump putting the next tranche of tariffs on hold and reopening U.S. companies' abilities to supply Hawaii. It's not clear, however, whether the latter will clear Congress. There's plenty of scope for trade talks to break down in the future. The Japanese yen, which investors tend to buy when they're looking for a safe place to put their money, dropped 0.6 to 108.53. Swiss franc lost 0.4, and the euro to 114.12 francs. The Aussie dollar sensitive economic fortune as China, country's largest trading partner, dropped to 69.93 on a weaker than expected factory data out of China, overshadowing the trade ceasefire. With that, we'll go on and move into the bias chart. That'll be just for a moment. Okay, great. Thank you very much. And so we're going to move on to the euro. We've seen the euro going and pair back into this 1326 area here. And then we're looking on the daily chart. So I said the euro has consolidated gains with targets ahead at 1481 and 1545. Support is 1326, followed by 1294. So we're going to go with this 1326. Now I know we did fall below that, but I'm just saying this is key here for support. So it's going to be 1326. And for the upside, let's go and take a look at the 2-hour chart. I've got this 24 here. Probably, I guess we can adjust it here. We had 1326, so we'll stick with that 1326. On the upside, is going to be 1368. 1368 there on the upside. And let's go move into the cable. So this cable has been unable to sustain a move above 27.34. You can clearly see that here, the 27.34. Downside forays below 26 have been shallow. A close above 27.34 should allow for a test of 2900. Support is 26.23. So here we are, 26.53. We'll go with the 26.23. In case you want to tip just below or challenge just below this 26.44, there's 26.23. And on the upside, let's go right there with 27.11. 27.11 for the upside. Now I left this as a range because we just kind of been dawdling in this whole area between this 26.44 and 27.81. We'd have to see a continued break here to turn it back to bearish. It's certainly pressing. I think it could press still a little bit further, and it might even slip, as I mentioned, down here, this 26.23-ish area. But we'll see. And with that, we'll go and move into the Aussie dollar. Yeah, so as the Aussie finished the week at its best levels, but major resistance is 70.27. You can see that. We've talked about the significance of the 70.27. We'll actually pull it back here. You can see how key that 70.27 has been. Look at that. That was been a big, big, big major level as we were looking at on the way back down. You can see when it came down here, tagged it, and then jumped back up. And even when we got the flash crash and came back and continued to repeat that and test it. But major resistance is 70.27. Beyond is 70.70. A pause is likely in order with support coming in at 69.60. A daily close below 69.23 would open the challenge of new lows. So we'll go with the 69.60 for support. And we'll go with 70.27. We hit the 70.13, which it got above it, but we'll still keep this 70.27 as a key area here. I mean, that's what it is. We thought we'd we'd run out of gas just before that, but we did make it up to that 70.27 and get just above it. So let's remove this. And let's go and move into the Kiwi. The Kiwi has dramatically risen from the double bottom. We can certainly see that right here. This double bottom has dramatically risen from the double bottom at 69.43 to exceed 67 cents. 67.25 is the 50% retracement. The pair will encounter resistance just above. A pause will find support at 66.59, followed by 66.12. You can see they went straight to the 50% right there at 67.25. We'll use that as our resistance. And we said we had support here going into, which would be 66.59. Let's and we've already had a pretty good move here. So honestly, that wouldn't be asking that much just to come down here and tag this area at 66.59. So we're going to go with that for the support. It's been quite the run here. On the way up, we were looking for 67.59. I mean 67.09, and we got above that. We pressed, but we did run out of gas not too much further. And this 67.25 is not only a 50%, but you can see a nice level coming across here. Onto the dollar CAD. The dollar CAD is closed the week below the prior target of 31 cents. The market is oversold and likely to find value buying at buying at the level of 30.43. Further demand is 29.80. Resistance is 31.36, followed by 31.92. So we'll go with this 31.36. And support in the short haul comes in right there. 30.76. I've got to admit, it's a little bit disappointing. I would have expected that as strong as the dollar had been, we'd been able to go and take out 31 cents and get up here maybe to the 31.20s. So that is a bit disappointing. I still have a long at 31, a small long at 31.27. So that's a bit disappointing. I would expect a little bit better reaction, but we'll see what transpires over the next couple of days. And let's go into the dollar peso. Now, there's really no change here with the dollar peso. I thought I'd save my analysis for the week on this thing. I don't see it here, but there's no change here in the dollar peso. Let me see if whether this is marked or not. Yeah, I did. Let me go on and hang on a moment. So since the peso continues to encounter headway at 19.23.6 level, currently the pair is stymied in a 20-point range. The market needs two consecutive closes above the resistance to establish upside momentum. A break below 18.92 would allow a challenge of 18.65. So you can see even with the dollar's strength, we still we're not getting past this. So really, we're just, as I mentioned before, stymied in this 20-point range here. So we'll go with the resistance is going to be 1923.6 and support. Is going to come in right there at 1908. We'll call it 1908.5. And let's go move into the dollar yen. The dollar yen, after reaching its target of 676, is now working off an oversold situation. The pair remains bearish with upside resistance at 858, providing an opportunity to reestablish shorts. Support is 753, followed by 727. Well, we had 858, and the high was 854. So we'll keep that 858. It looks like the market already came off quite a bit. And let's go and look for support. It's going to come in right there, 806. Actually came pretty close in here, 806. And let's go to the cash dollar index. The dollar index was incapable of securing a bounce above the daily close level of 96.50. Further upside resistance is 96.70. The market remains weak with a potential move to 95.03. The interim target is 95.55, which confluences with 95.65, which is also the 161% projection. So this is that key level. I thought we would make this move ahead of the G20, and really nothing's changed in the G20. Like I said, the only, you could say, more significant positive news would be that Trump said that they'll put Hawaii, they'll still review it for potential issues being on their list. So that's the only thing that you can say, okay, you can point to concrete. I mean, the only thing they've done is it said we'll hold off on further tariffs. That doesn't change anything because everything's still slowing down. So as far as the resistance, we did mark the 96.70. We said they didn't get past the 96.50. Further resistance remains, not, you can see right here, resistance remains 96.70. So we'll go with that. Still remains bearish. And let's take a look at from a support side. Let's take a look here in the euro. Let's see if we can also get a fib here. If you're interested in scalping this, the most recent high here, and then again from here. So 53 and 55, 38% and 55. So a stretch up here to 55-ish. And the 38% of this most recent move come in at 46. So if you're scalping, I did pick up a little bit down there, but hang on. And let's take a look here on the cash dollar index. Well, we actually ran out of gas right here in this level here, which is 96.62. Support's going to be here at 34, 96.34. There we go. Okay, with that, we'll go into the cross rates. Well, we had a pretty good run here in this New Zealand yen. Let's go and look at this. So the New Zealand yen has experienced a nice short covering run as the yen has eased back. Immediate resistance is 72.52, followed by 72.83. Confluence was 72.75, which is a 38% here. Support is the major level, 72 cents. So we did make it up here. We're going to go with this 72.83 here. 72.75 is a 38%. We'll go here right here with 72.83. Did overshoot that a bit, just a bit. And for support, we already mentioned 72 cents here. But in the meantime, it's going to be 72.20 right there, 72.26. And let's go to move into the euro yen. Says the euro yen is closed just above the major level of 22.64, allowing for a further push to 23.31. It looks like we made it to 23.31. We sure did. We actually ran out of gas at 23.36. So we put on here allowed for further push to 23.31. Minor resistance is 22.91. So we did make it there to the 23.31. So there was our resistance. Support right now is going to be right there, 22.58. Okay, the euro has furthered the downside move below the key level of 62.62. Immediate support comes in at 61.42. Confluence was 61.56, which is a 38%. Daily EMAs remain in buy mode, so expect short covering to ensue. Resistance is 62.75, where shorts will be re-engaged. So We had 61.42 with 61.56 being the 38%, and it got down to, well, not bad, 61.44, not bad at all. And we had coming into this weekend 61.42. So we'll go 61.42. And as far as resistance, $62.32 for right now. $62.32. Now let's go into the Euro Kiwi. The Euro New Zealand dollar slid for 5 straight days, coming into 69.21. Further support is 68.51. Short coverage is likely as the market may have overshot in the short run. Shorts will be reestablished on a move to the major level of 71.31. Well, heck, we even pushed them even further right now. So we said there was further support here at 68.51 right there. We already had a pretty tremendous fall. Let's take a look here. $16.84. Some nice volume coming in there. 68.81. We said 68.51, so let's go with 68.51. So hang on. And on the upside, 69.80. Boy, that's a long ways to go, but here's this major level right there with 69.46. We'll go for right now 69.46. See that coming across here. Boy, that's just been one steady beat all the way down. Let's go into the Aussie yen. The Aussie yen has closed above 75.70, opening a challenge of 76.19 with 76.55 to 38%. The next 50 pips upward is fraught with volume, and pair is likely to struggle as it makes an upward push. Initial support is 75.31, followed by 74.94. Well, we're talking about this area right in here. You can see here is that even though we closed above here, this whole area's got a lot of good volume in here, and that's what we're talking about, this having a difficult time. So resistance is going to be right there at 76.19. And support is right there. $75.57. $75.38 would be the 38%. Not a bad area right there, too. Okay, and into the guppy. The guppies attempting to establish a bottom at the major level of 3602. Pair remains in a sell mode via the exponential moving averages. 2 consecutive daily closes would be required to confirm a bottom. A break below 3602 has the initial target of 3460, which is 78%. So let's go move into the shorter time frame to get an idea of where we stand. Resistance comes in right there at 37.66. Boy, we're way off now. So let's move this down to right there. $37.46. And support is right there at 36.60. 36.60. And lastly, with the sterling odd. Sterling odd closed the week slightly below the major level of 80.89. Friday's close can be construed as an inverted hammer. Support comes in at 80.47, which is a 50%, followed by 80.13. So we'll go with 80.47. You can see right here, and the low so far was 80.45. Looks like we might have two back-to-back inverted hammers. So let's go with 80.47, what we had listed. There's resistance 81.35. And there's the bias chart for today. Going to get that posted. Thanks for joining us here on the European Crossover webinar.